What's going on, investors? My name's Emmanuel, and in this video I want to answer a question that I received from an investor in my Discord group. And the question is to do with, why is the S&P 500 setting all-time records, but then when I look at my portfolio is either down or it's in the red. So I want to answer that question, and I also want to take a look at Palantir and Tattooed Chef and Celsius Holdings, which are my top 3 growth stock positions. And I want to kind of give you some predictions based on what I am seeing using the Fibonacci retracement tool. So if you gain any value in this video, please make sure you smash that like button. And if you're new to the channel, hit that subscribe button and the notification bell to stay up to date with all of my latest videos. With that said, let's dive into it. CNBC is constantly rubbing this in your face. The S&P 500 rises to new record as big tech stocks gain. Another headline from Reuters, S&P 500 opens at record high on tech boost, okay? But my growth portfolio personally, I was up 12% year to date, but right now I'm up only 1%. So my portfolio has zigzagged, okay? And I'm talking about my portfolio that's majority Tattooed Chef, Palantir and Celsius Holdings. Those are my main top 3 positions. So even though the S&P 500, the Nasdaq, the Dow Jones, they're setting, record highs, my performance is lagging the market overall. Now, I want to tell you what is going on right now, because institutions, hedge funds, they have been consistently shorting small to mid cap stocks like for the past 3, 4, 5 months. You may have experienced since mid-February that your portfolio, especially if you are heavy in small to mid-cap stocks, you'd find that your portfolio has just been really annoying over the last 3 to 5 months. And here is proof, okay? So if you look at it over the last 3 months, what has been outperforming? It's your mega cap stocks. So these are your Apples, your Facebooks, your Amazons, these are your mega cap stocks. So these are typically companies that have a market capitalization of $200 billion or more. Facebook recently became a $1 trillion company. Over the past 3 months, they have been the best performers. So your institutions, your hedge funds, they have been buying mega caps and large caps quite significantly, whilst there's been very little activity with your small cap and your mid cap stocks. So companies that have a market capitalization of between $1 to $5 billion are now considered small cap stocks, and your mid cap stocks that have a market capitalization of from $5 billion to about $50 billion. So think about your Palantirs, for example. These will be considered mid cap stocks, and then your large caps are between $100 billion to $200 billion, and anything above 200 billion upwards are considered mega caps. There's been no love for small to mid-sized cap stocks. If you look at it over a 1 month basis, over the 1 month performance, the mid and small cap stocks, again, they've been sold off by institutions. Institutions and hedge funds are not interested in companies with these kind of market capitalizations. You can see they were buying heavy into mega cap stocks. And looking over the past week, you can see again, no love for mid cap, no love for small cap stocks. They're being sold off, while mega cap stocks, you can see, starting to slow down a little bit, but they are absolutely destroying your penny stocks, your nano stocks and your micro stocks. So taking that into consideration and knowing that institutions and hedges are pretty much selling off their small to mid cap stocks and buying mega cap stocks, you then have to look at the S&P 500 as a whole and see the whole weight distribution of the entire index to understand why the S&P 500, the Dow Jones, they're all making all-time highs, while small to mid-cap stocks are getting hammered. So number one, you have Apple, okay? Apple weighs currently over 6% of the S&P 500. And when you look at the performance of Apple recently, over the past 5 days, Apple is up over 6%. But when you look at a company like Celsius Holdings, over the past 5 days, Celsius Holdings is down 5%. So Celsius Holding with a market cap of $5 billion, you can consider that a small cap, whereas Apple has a market cap of $2.41 trillion. It's up 5%. Let's take a look at Microsoft. Microsoft weighs 5.6% of the portfolio. And if you look at Microsoft over the last week, it's up 3.40%. So again, that's a huge move. Think about it. It weighs over 5% of the entire S&P 500, whereas when you look at a company like Tattooed Chef is down over 10% over the last 5 days. I mean, we can go on. Amazon is in third place. It weighs 4.29% of the entire S&P 500. Amazon had some great news come out yesterday, and Amazon over the past 5 days is up 7.50%. Whereas if you look at a company like Palantir, Palantir is down 13% over the past 5 days. So I can go on. You've got Facebook, you've got Alphabet Inc., which is Google, Class A, Class C, Berkshire Hathaway, you've got Nvidia's been killing it recently, Tesla, and JP Morgan. All right, so the top 10 of the S&P 500, if you add it all up, weighs more than 20%. So these companies here are essentially dragging the rest of the S&P 500, because the further the list you go down, the lower the market cap is. And like you've seen with the current strategy from the hedge funds and the institutions, they are shorting these type of companies. So when you're seeing headlines like the S&P 500 breaks new records, just understand that that doesn't represent the entire market. And it doesn't mean the companies in your portfolio are bad companies. It just means they are getting shorted heavily right now by these institutions. So you need to be able to understand that this is just part of the game that you chose to play. And for me as an investor, I chose to invest the bulk of my money in small to mid cap stocks because I believe in the companies that I've invested in the long term. Just bear in mind that the S&P 500 setting all-time records, all-time highs, and your portfolio, especially if you are heavy in small to mid cap stocks, might be trailing or lagging. It's part of the game, okay? Institutions and hedge funds have no interest in small to mid cap stocks right now, and that's just the way it is. Is it going to be like this forever? Of course it's not. We're going to see periods where the mega cap stocks will start to slow down and the smaller to mid cap stocks will start to pick up, and that's where we start to see exponential gains. All right, so don't be disheartened by the headlines. Ignore the headlines and focus on the earnings, focus on the facts, and focus on the fundamentals of your businesses that you've decided to invest in. All right, let's take a look at the stock price for Palantir, because it has been on a decline recently. Over the past, since the 28th of June, the stock is now down about 18%. And right now we are approaching key supports, okay? The resistance of $26.66 held up quite firmly, and we pretty much bounced off that, and we're now approaching key support at $22.33. So this is a key support level because it's held up quite a few times this year. You can see it held up here, it held up here. The support also held up around June, and even going back to last year, you can see that support held up here and it held up here. So this is quite a key support level. So my guess is that this support level will hold, but it's entirely possible that it can break through that support level. And as you can see, that the next support level is at $16.15, which is entirely possible. You need to hope for the best and prepare your mind for the worst. So if this support level doesn't hold, then we are probably going to retest this support level around $16 a share. But if it does bounce off this key support level, then the next resistance level is $26.66, and that held up last time, and it has held up quite a few times as well there. And if we can break that, then that will be great. Now moving on to TTCF, similar story. Okay, so we are now actually at key support already. Key support level is $19.83, and we're currently sitting at $19.80. Now, if this support level doesn't hold, like it's looking like it's a bit fragile, it's not really holding, then the next area of support is around $18.77, which again is a realistic target. Now, I personally will not be loading in this zone. If this support level doesn't hold and we pull back to about $17, then I will be choosing to load up around here. So this will be my loading zone. I'll just buy more. Celsius holding, similar story. It hit $67 and bounced off it and pulled back higher, but this support level here is quite key. It held up around May here, and again, it's more than possible for Celsius to actually break this support. Your next key level will be around $63.19, and I will not be buying. I'll not be buying. If Celsius drops below 60, maybe 58, 51, around this level, this is where I'll be looking to buy. So I'm very comfortable and very happy with what's going on right now. I'm very cash heavy, and I am looking for opportunities to add to my favorite positions. So I hope that clears everything. I personally am not worried with the current sell-off in small caps to mid cap stocks. It's a great opportunity to buy. It's where I see value right now. I mean, if you want to chase Apple, if you want to chase Amazon, if you want to chase Facebook at their all-time highs, that's entirely your decision. But for me, that's too risky, and I see tremendous value in small to mid cap stocks. But remember, none of this is financial advice, so please make sure you do your own due diligence. Thank you so much for watching. I appreciate your time, and I'll see you in the next one. Peace.